There is one exercise, there's a handful, but there's really one that is kind of the initial drop the mic aha moment that is the simplest exercise, and I call it my budget alignment tool. And all that is it says,
All right, well, I am pleased to have join us today Sharon Spooler, founder and CEO of Surgo Advisors. And there's got to be a story behind the name. But Sharon, thanks so much for joining us. Happy to have you with us. And tell us about the name Surgo Advisors.
yeah, thanks, Andrew. It's a pleasure to be here today. I'm really excited to have our conversation about helping businesses grow, helping businesses succeed in their exit process. The background behind Surgo Advisors is, I believe, it's Latin for to grow or to rise, and that's what I help companies do. I help them grow.
I got a chance to check out your website, surgoadvisors.com. There's a lot of great content there. And we met at the May 2025 EPI Summit in
We did.
Southwest Florida. Love the content that you delivered there. We'll talk a little bit more on that later today, but maybe give us a glimpse of your entrepreneurial journey. How long have you, or when did you find Surgo, and how did you get where you are today?
Yeah, that's a great question. So I founded Surgo about 18 months ago. Prior to that, I had been a managing partner at a large national fractional chief marketing officer organization, which I helped scale and build from a few consultants up to over 100 consultants. I was on a plane every week, traveling and managing a team. And I decided that I wanted to balance a little bit more of my home life, my teenagers who are in high school and playing lots of sports and make their games. But I also wanted to help founders grow because my passion, my purpose is founders are the lifeblood of our economy. And they have created a lot of opportunity for other families, including mine, throughout my career. And I have been a part of an exit 22 times in my career, either on the buy side or sell side. And I'm really passionate about helping lower mid market and mid market founders complete the journey, their process, and exit their business and realize their dream.
Excellent. So when we met, you kind of shared with me your vision on all the different things that business founders create, right? It's more than just new legal entities and a handful of jobs. Share with our audience like your vision, your views on that, which I think are fantastic.
Oh, thanks, Andrew. Uh, yeah, as I mentioned, founders are the lifeblood of our economy. They create jobs, they create opportunities, usually within our communities. So they, in my opinion, and I've worked for really large Fortune 100 companies in my career, and I've worked for a lot of founder-led businesses. And in my experience, founders take care of their employees in such a way that I was able to pay off student loans early in my life, that I was able to buy property early in my life. That has really been trajectory changing in my career
That's awesome.
journey. And so, I believe that founders are the lifeblood of our economy and that they're creating jobs, but they're also helping families create wealth, which then helps our communities. And in the end of the day, that's what we have is our
Yeah,
community.
so I have to ask, were you part of an ESOP transaction, or were you just or were you working for a founder that was really that visionary and that great to his or her people?
Yeah, it was the latter multiple times that founders who recognize the blood, sweat, and tears that their early team members put in. Multiple times I was employee less than number 10. So, and even later, even in larger organizations where stock and restricted stock incentives were put in place to help us participate. And in addition to that, even founders who are visionary enough to set aside part of the proceeds for success bonuses, retention bonuses, for key people that they believed helped them achieve those milestones.
All right, so when friends and family ask you what you do, what like, oh, you just started a new business? What does Surgo Advisors do? Like, how do you explain that?
First of all, it's always, is it Surgo or Surgo? And I say Surgo, it's Latin. Not that I took Latin, but yes, it's Surgo. And the second answer is I do revenue growth consulting. So a lot of organizations view marketing as OPEX, as a tactical line item of swag and collateral and events, and that's all it is. And in my opinion, when it's done right, it is the investment we make in the growth of our business. Not unlike a capital investment in machinery and materials and processes, it is often the single largest discretionary line item in a P&L, that marketing line item, right? So it's very tempting to cut it. But what doesn't happen in a lot of organizations is the link between that cut and the impact on ability to drive revenue. So
Yeah,
that's the
it's
problem.
ironic, right? When the market gets a little tougher, or when a pandemic hits, the first thing that seems to get cut is the marketing spend, which is completely counterintuitive.
Yeah, it's a great comment. I actually started working with a company during the pandemic in 2019, December of 2019, auspicious timing. We had
Yeah,
been
I
speaking
guess.
for over a year. It was a $9 million revenue business, a services business. They implemented IT software.
Okay.
And they had been doing a lot of what we've coined at my past firm random acts of marketing without a cohesive
Well,
strategy, right?
you should trademark that.
I think the last firm I worked for has. So
Okay.
yeah, but I'm sure they'll let me borrow it. So the random acts of marketing were everywhere, and when they would go to their largest trade show of the year, I would say, was it successful? And they would look at me and say, we don't know. We're just, huffing and puffing after the sprint of getting ready for it.
Sure.
And I said, well, how do you know if you'll do it again next year? Well, of course we will, because we've always done it. Well, what would happen if you didn't? And what would you expect to get out of it? And we'd been talking like that for a year or two, and finally the guy said, all right, I'm tired of you asking me these questions. Why don't you come in and help me get the answer? So we did that. Fast forward 3 months, the pandemic hit. They were one of the forward-thinking, he was a forward-thinking CEO, and he said, I'm going to try, by all means, I've been trying to do this for years. I'm going to stick with it. He did. We doubled down. We went even harder at marketing, built all of the strategy plans, links to performance, all of that during that downtime. And lo and behold, 2 years later, they exited for 5x the value they were at the time that I bought them. So they were
Awesome.
then a $40 million business with substantial EBITDA, and it was all driven by marketing with in-year return on investment marketing performance.
Awesome.
So it was a really good story, and
I guess.
anyway, so there's a story of what's possible if you don't take the OpEx route, point of view on marketing, especially during something like a downturn.
And think about it as growth X, right?
Counter cyclical. Be a little counter cyclical in the spend. Thankfully, they were in a financial position to do that. Not everyone is, but they were really again visionary in sort of how they approached it during that time.
So if you could go back and grab a cup of coffee and mentor your 20-year-old self, what advice would you give?
Wow, my 20-year-old self. Well, in some ways, I want to sort of echo the advice and the feedback I've gotten from some key mentors in my career, who told me things like, that it's good to spread your intensity across multiple pursuits.
Okay.
Right, I was a college athlete. I studied engineering. I was working my way through college at the same time, and so I was even a dual sport college athlete. So
Goodness.
doing one thing at a time has never been my forte.
Okay.
That led to a career of working with multiple companies, to help them achieve their goals. It's not a singular focus. I know that maybe bucks the trend, but maybe I was wired for this gig economy long before it became a thing.
Sounds like
And I
it.
would tell
Yeah.
myself to trust that. Be a lifetime learner would be another one. Find great mentors would be a third. I don't think any of us are ever in a place in our life where we couldn't use a mentor in at least one capacity, if not more. Find them, engage them, be vulnerable with them. Invest in your leadership skills. I took early in my career, I was a trained engineer, and so it was mean time between failure, right? We were managing the numbers, the process, the metrics. It was maximize the mean time between failure was my definition of management.
There we go.
So I had to go off to some coaching training and some leadership development training where they stripped us all the way down mentally to our vulnerable selves and kind of rewired some of that training. So I would tell myself to do that a heck of a lot earlier. In combination.
Great advice. Yeah, is mean time between failure a great KPI for life? I don't know that's how we would measure success, right?
Well, I think some people live that way, right? That it's
That's fair.
and I
Yeah,
think maybe that's why I love founders is you have to be addicted to failure in some ways because there's always
right.
some trip ups,
Yeah,
right? That's why I admire
right.
founders so much.
We met as we talked about. We met at the EPI summit last May, and I was that day. I found myself looking at the variety of sessions I could attend, and yours um, really caught my eye. So, like, how did you happen to show up in May in Port Charlotte, and what inspired you to deliver that messaging at the EPI summit?
Yeah. So the talk was really about leveraging your thought leadership, your knowledge in through content, through all platforms, blogs, podcasts, interviews, long form thought leadership, speaking engagements. Because as a services provider, as many SEPAs are, right? We're all service providers. We maybe brand or tweak the way we deliver our services a little bit differently based on our experience and our interests. But what we sell, our inventory isn't t-shirts. Our inventory is knowledge and experience. That's why we're hired. So I spoke about the importance of that, how to do that, and how I ended up there was really serendipitous. I really spoke about my belief that founders are the lifeblood of our economy. I've also been part of, as I spoke, many transactions throughout my history. And I've seen the power that certified exit planning associates, SEPAs, can have on those transactions, the impact they
Yes.
can have. So
Okay.
I love what EPI does. The third leg of that stool is that a few years ago, I was introduced to someone called Paige Wysocki, who is the director of marketing at the Exit Planning Institute,
Okay.
and we quickly entered into a mentoring relationship. As everyone knows, if you listen to Scott Snyder's podcast, he talks about the role of mentors for himself and for everyone in his organization. And so I have been serving as his director of marketing, Paige Wysocki's mentor for a few years. And so through
Excellent.
that relationships, he said, hey, these SEPAs need to learn what you're talking about in terms of your inventory is your expertise and your knowledge, and how do you demonstrate that
Yes.
through your marketing programs.
Well, you certainly tweaked a nerve there, right? Because you spoke to a full room. It was really fantastic. And then the following morning at the breakfast event, where there's all these roundtable breakfasts, just uh, full transparency to the listeners. Sharon's table was full, and people were pulling up chairs to her table, and mine was empty. So I think not many people wanted to listen talk about Q of E and how to leverage that to help your clients have a great exit. They were much more interested in what you were talking about. What I mean, you've been quite active in the EPI community. You mentioned to me earlier that you've spoken twice. Um, when when SEPAs come to you with questions and hey, Sharon, I need some help here. What are some of the biggest challenges you're seeing SEPAs face, and how do you help them solve those challenges?
Yeah, I think there's a twofold answer to that. The first is SEPAs want to help. They went into this to help. founders
Wow.
exit, and to do it well, and doing it well isn't just the financial side of it. It's their spiritual side. It's what happens the life after the exit. It's taking care of their employees. It's also a huge emotional journey for these CEOs. I've seen it firsthand. Uh, the journey of the exit, the excitement, the highs, the lows, the due diligence, the LOI, the way the numbers can change between all of those moments, and the information imbalance that occurs, because usually the buyers of these organizations have done this a few times, and this founder may have never done this before.
Yes.
And there's a huge information imbalance. So CEPOs want to connect, they want to provide their services, and so there's a desire there to help them connect better with those founders that might want to understand how they can leverage the services of a SEPA in that process and what they would get out of it. So that's one way in which I've worked with SEPAs. The other way is a lot of, as you pointed out, a lot of the companies we're working with, they fundamentally need a Q of E. They need a strong earnings and audited financial statements, and that's like table stakes to do any sort of process, right? Without that, it really doesn't go anywhere. What I would argue is the part of the equation that founders sometimes overlook is the value of having a growth story as part of their exit. So
So right.
not just
So
what
right.
audited financial statements look backward, and they can predict future performance if operating norms stay the same, if financial and market conditions stay the same. You can predict linearly what would happen if you do those things. The reality is, what's going to happen in the future is just as important to a potential buyer as what has happened in the past. And many times when they say, how are you going to use this investment, or where would we take this company from here, they don't have an answer. And if they do, it's kind of a pie in the sky, well, maybe you could, but no one has put legs on that. No one has said, here's the market opportunity, here's what it would cost, here's how I would execute that. And so that's the services of a growth consultant like myself, right? We help
Yes.
say there are hundreds of things you could do. What are the 5 things that maybe would be at the top of our list? And why would someone believe that those are good growth strategies for us? We can do those things now, 12 months, a year, 2 years, 3 years from an exit. The things we don't get to and that look exciting are great for your SIM, your SIP, your management presentations, right? To help drive additional value in the exit
Yeah,
process.
but as I remind clients, right, the buyer is going to create a valuation based on um, what's happened in the past, but they're not getting that company. And so if you can show them what company they're getting and provide uh, proof that they can anticipate that EBITDA stream to continue to go up and to the right, you can get paid for that. Yeah,
Yeah, yeah, exactly. So that's what I help do, right?
excellent. So you spoke to a full room at the summit. You shared some absolute fantastic nuggets around the use of how to leverage LinkedIn for some things that I had no idea. I've been on LinkedIn, I think, since 2006. I had no idea of some of the gems that you dropped, but there were other tools and frameworks. What other tools and frameworks do you help SEPAs leverage, or business owners that you work with, that bring structure to something as complex as so many facets? I mean, you've lived it obviously with the 22 exits, but what are the other tools and frameworks that you provide?
Well, I've been doing this type of work for over 11 years and for over 50 companies that I have seen and worked with over that time period. So I've developed a lot of frameworks and tools. There is one exercise, there's a handful, but there's really one that is kind of the initial drop the mic aha moment, that is the simplest exercise, and I call it my budget alignment tool. And all that is it says, if we want to grow from X to Y next year, how many customers, how many deals, how many things do we need to sell in order to reach that? And then in order to sell that number of things, how many proposals or RFPs or conversations do we need to have? And we back into the leading indicator called demonstrated marketing interest. A lot of people call those leads. How many leads do we need? Right? And if we look historically, we might be able to figure out what a lead costs us in the past. And if you multiply that times the number of leads you need to grow that much next year, voila, you have a marketing budget. It's so simple.
But based on what you're describing, demonstrated marketing interest, that's a much more calibrated and much more valuable number than, hey, I've got these leads. When not all leads are created equal, and right here, right now, each of those leads is not the same in terms of their likelihood to convert.
Andrew, it sounds like you've been in the room when I've done one of these workshops. Because that's exactly where it goes, which is now let's define what each of these stages mean. Let's get sales, and that's the word alignment. Let's get sales and marketing aligned
Yes.
on what these stages mean. And let's get finance on board with, hey, if we're going to spend this, how many leads do we need? What do we expect this to look like? And then we can gauge whether we're on track or not as the year goes, as opposed to seeing, random acts of marketing and dollars going out the door and no one really sure what we're going to get for it. So it usually stops the random acts, get some structure to what we're spending and what we expect from it, and then get sales and marketing and finance on the same page, which almost never happens in most of the organizations I enter. They're usually battling about something related to,
Something, right. Well,
yeah.
hey, it sounds like I'll put in a shameless plug for you here, Paige, if you're listening to this. It sounds to me like that's it's something ought to be covered in Nashville next May.
Ooh,
Yeah, because I think it's so valuable, not just for the individual SEPA that's trying to build and measure their own client pipeline, but also for all the business owners that they serve as well.
it's the
Oh,
bridge
that's really
between
cool.
the economic, the financials, and the investment is what it creates.
There we go. Excellent. Um, so between your clients and the SEPAs that you talk to, what trends are you seeing in the lower middle market? What do um, you know, there was an election last year, as it turns out. Not sure if you heard about that or if you've heard anything since, but there's data that proves that election year cycles are generally atypical in the lower middle market. But this year didn't spring back quite as normal. What are you seeing in the world that you operate in and in this with the CEPAs you're talking to?
Yeah, well, I mean, I think all the B2B services providers are experiencing this roller coaster of uncertainty and gas pedal, it feels like. So founders are delaying decisions, holding off, not sure. I think financial markets are, rates are still high. It doesn't look like it did a few years ago. But there's a lot of capital to be deployed.
Yeah.
So the right the right deals can get done and can still get done at a very strong valuation. So not investing in the right team of people around you as a founder to build those foundations that you need to have a good exit by having the right advisors and mentors around who have done this before is kind of an even bigger miss in this environment because of the uncertainty and because
Yes.
the less than good looking deals are either not very strong or not happening.
Right.
So I think the
Yeah,
time is now.
that's
Yeah,
exactly right.
yeah. Would it be too far off if I talk a little bit about what I've been seeing with AI in this space?
No, please do. I think we all hear we're all bombarded with headlines that speak to AI, but I'm gonna say that again. We're all bombarded with headlines that involve AI, but it seems like the rubber hasn't really hit the road, and we're not quite sure yet who's going to turn this into something really useful and even more important, something that can drive either revenue or net income or both.
Yes. So I've been tracking this. My undergrad degree was in operations research, which was an old school term for data science. So I was building AI models, neural networks in the 90s and worked for
Before it
a
was
company.
cool.
Yeah, and worked for a
Before it was
company,
cool.
FICO, right? Worked for the company FICO. That was the first commercial deployment of an AI model in the 90s, which is the fraud score when you swipe a credit card. Okay.
Okay.
I worked on that product. So I have a huge interest in what's happening in this space. And there's a couple of things I think lower mid market and mid market companies should be paying attention to.
Okay.
One is there is a huge impact right now on companies' site traffic from AI enabled search. So Google has rolled out their AI enabled search at the top of their search results. It's stealing traffic from the organic stuff, right? Because you got to scroll down to the SEO, the organic listings, and the paid listings that companies have,
Yes.
right?
Okay. I know this is true because now that you are explaining it, I'm like, yes, that's exactly what's happening.
Yes. So what we're learning is that people that still come to your site after the AI enabled search are much more ready to buy.
Okay.
Okay. They've already done a lot of
They fight
research.
their way through the noise. If they fight their way through the noise, they're legit customers.
Yeah. So that's good news. Okay. It
Yeah.
might mean you're getting less traffic, but maybe it's better qualified. The thing we need to do is we need to make sure AI knows the right stuff about us. So if you aren't putting content out there in a format that AI can digest it and understand you, who is telling them about you? Your competition? Is it making you make it up things about you? You have to teach. It's like a game of telephone, right? We need to teach
Yes.
AI how to talk about our business so it says the right things in those summaries and so it shows up in those summaries.
All right. So I was wrong earlier. There's your EPI Summit talk for May.
Well, okay, let's talk about turning that into revenue. So
Yeah.
last week was last week, 2 weeks ago, last week was HubSpot Inbound, which is HubSpot's big annual user conference. First time ever it was in San Francisco. It's always been in Boston.
Okay.
Knock, knock, Salesforce. We're in your backyard, right? Kudos, HubSpot. Huge announcements around how HubSpot is integrating with AI tools like ChatGPT and Claude, creating direct integrations. So now you can, it's not just about what's happening in your data and in your business or why it's happening. That's interesting. But you're now able to ask what if and how best, which is intelligence at
Yes.
its best. So connect it to your CRM, ask who are my best customers? Why are they my best customers? What type of customer should I be going after? It can start answering those things. So marketers started this AI journey years ago with using it to write content. That was stage one. Stage two, dumping a whole bunch of data into AI to, because we've always had disparate data systems, right? That's something great marketers and salespeople have been struggling with for years. Some of it's in your ERP, some's in your CRM, some's in some weird marketing system over there, right? So,
Yeah.
so the second phase was dumping data in and getting some reports. Now, the tools that we're using to do our marketing, like HubSpot, like Salesforce, they all have AI roadmaps, and they are all making it easier for us to drive revenue and profit performance, EBITDA performance with our data.
Awesome.
So, so if you
Oh,
use any of those
that's great
platforms,
stuff.
tune in, right? Go check out what they're saying out of inbound. There's a lot of good blogs coming out right now from many of their
Okay.
partners that you can read to find out more.
That's great.
Yeah.
Tell us a little bit about your SEPA partnership. How does Surgo Advisors complement the work of SEPAs? What response did you get from your talk in May? What kind of feedback, and how are you working with SEPAs to help them grow and expand their business?
Yeah, a couple of ways. I think one is most of these lower mid market and mid market businesses, and that includes SEPA practices, often don't have a marketing resource or have one who's like a marketing manager or an outsourced designer. Similar to the relationship that I've had with EPI and Page that I mentioned earlier, some of these organizations have been utilizing Surgo to provide mentorship and consulting, coaching training for their marketing managers. It's a low investment way of dumping many years of knowledge, and helping people kind of prioritize and avoid the roadblocks and grow. And it's difficult to be that sole marketing manager where you're not really sure where to go if you have a question and what's best. So that's one way I've been helping SEPA organizations and potentially their clients with this topic, with this area. For maybe more mid-market companies, there's the same offering as possible, but there's also the opportunity to kind of rent a marketing leader, right? That's what the gig model really is.
Yes.
If you need to level up, if you need more of the strategy work to determine how you're going to grow, of the 100 ways you could, what are the ways we should be investing in, getting alignment on your team, and then even sitting on as part of your team as you go through the exit process. I'm doing that now with a company or two, and that's the other way I work with, particularly our mutual clients.
Excellent. All right, so you've been through those 22 exits, as you said, plenty of experience on both sides of the table. If you had one advice for a SEPA or a business owner prepping for an exit, you've seen a lot of things happen, but you got to condense it down into one piece of advice. Where would you go? What's the most important advice you'd give them?
Oh, I'm really torn. I have two.
All right, I'll give you two.
Okay.
1A and 1B.
1A is they're not the founder needs to have the right team around them to make the business attractive to an investor. They don't want to just buy a founder who's got all the answers, right? That's not
Yes.
scalable. There's a single point of failure, to go back to an earlier analogy. So
Right.
build your team. I would say the advice is get the right team around you who's done this before. There's way too much at stake to do it your first time without any mentorship, support, advice. Build your team, your internal team,
Yes.
rent a team, build a team to go through it. There's too much of an information balance with potential buyers too who've done this before. Woo you and then put you through the paces, and the other end of the number may not be what you want it to be.
Yeah.
So that's one. Two is by all means link your marketing investment to growth. And the metric for that is customer lifetime value divided by customer acquisition cost. Figure out that metric going in. That is the coin operated machine. It basically is the number that says for every dollar I drop in, I get X dollars out the other end. Customer lifetime value divided by customer acquisition cost. Get that metric as part of your management presentation. Work with whoever you have to figure out what that is for your business.
Okay, now that seems on the surface, that seems so blatantly obvious, but in my career, it's so rare that organizations know that number or know how to calculate it. That's gold right there. And I don't think maybe I had one client in my career where when you're building out a sim, you know that KPI.
That's what I mean by telling a growth story. That is the metric, because the buyers are all about the numbers, right? So we can put flowery graphs together about the market conditions and the new product roadmap that we have, and at the end of the day, it's how much is it going to take to invest to see the return on that. And so it's all a business case. So
Yes.
if marketers, and I can tell a story. I can look at a trend of a CLTV to CAC by quarter, and I can tell stories. Here's a period of investment. Here's a period of growth. Here's a period of investment. Here's a period of growth. And it should kind of modulate. And the health of that CLTV to CAC number will tell you, is a company under investing in their growth or not? Is it efficient? So you can have a 1 hour conversation in a management presentation just about that number and what it
Yes. You
means.
should be. You should.
Right?
Yeah.
So we could talk about ways to do it. Recurring revenue businesses, you can look at average time on books times the average monthly cost divided by So
Right.
there's ways. and trade-offs, and of course whoever's looking at it will ask how you did it, and we need to have a methodology defined. But yeah.
Okay, as advisors, when we get to closing day, or we get to the other side of a exit for a client, and you look back and you're able to realize, oh, here's the ways I added value that was well in excess of what the client paid me. Without breaking confidentiality, can you share any of those sell side transactions? What did you do to really pull a lever to really drive that, to really drive the valuation that the entrepreneur was able to achieve?
I think number one is I knew my numbers inside and out on marketing and sales and how those worked together and how those drove growth and what was needed to invest to drive that growth. That's
Yeah.
one. Two is I had at the ready 3 or 4 strategies, such as entering a new market, rolling out a product enhancement, driving more cross-sell, upsell revenue from existing base. I had 3 or 4 of those at my fingertips to say, this is exactly what I'm going to do over the next 3 to 4 quarters after this deal is done. And the third one was I after a really nice bourbon around the fire with the founder, I would usually say, okay, let's get ready for the next 90 days, because that's go time. So it would be, now we got to orient toward the 90 days coming out of the end of the deal and getting ready for the next phase, because it only becomes more intense from a metrics and analytics perspective after the deal is done.
Tell us, you're talking to business owners, you're talking to CEPAs. Tell us, what's your crystal ball telling us? What's the end of this year going to hold, and what do you see happening in the broader exit planning community in the coming year?
Oh, well, some of my favorite economists are this firm called ITR Economics. ITR, right? The Bolios, people know them. So I listen to them. I read their reports constantly. And they say it's going to be a period of growth. And I'm very optimistic. I'm maybe an eternal optimist. I think, we always find ways to navigate whatever's happening around us. If you, like me, you've lived through the '09 meltdown, and I was in financial services when that happened, so I saw front and center, and then of course the pandemic. You know that we're always going to find ways through these periods. This is a period of a little more uncertainty. Those that track it say the uncertainty was at a really historic high, even higher than it was during the pandemic earlier this year. But it's getting better, and I think it will continue to as we settle into where we are today, and some of the policies that have changed start to float down in terms of value to businesses and things like that. We'll see some good times coming ahead.
If you're interested in learning more about what you heard, including learning more about becoming a SecondWave advisor, please use the link in the description to visit the website, and you can receive the first few chapters of the book for free.